Today, we're going to speak about Marathon Petroleum, one of the largest refineries in North America. They released their quarterly earnings again on the 3rd of August on NASDAQ. You can find more of the information from that. We will look through the earnings call report and try and discern insights that might be relevant for specific types of solutions that you might want to reach out to Marathon with. I'm Sridhar, co-founder and CEO of B2Brain, and I'm here for analyzing Marathon Petroleum's quarterly earnings report so that we can find insights and talk a little bit about how you can use them in your sales outreach when you want to engage with prospects at Marathon. First off, let's go over to look at where you can find the quarterly earnings for Marathon's most recent earnings report. Go to marathonpetroleum.com/investors. You can find all the information that is necessary here, right? I've opened the second quarter earnings report already, so that it's just easy for you to understand what's going on. Quickly get to it. Before you dive into the quarterly earnings, let's look at, broadly what's the kind of a company that Marathon is trying to build. Okay, the company has gone through a bunch of changes, and in the recent few months, they have come out as a very, very safe and sound stock to be owned, according to NASDAQ. So they must be doing something interesting and right. Let's have a glance at what is it that the company is doing. The company took a lot of hit during COVID, but after that, their CEO has put in place a very strategic and important plan to turn it around and become more frugal, more cost-effective, and more valuable in terms of being able to generate better margins and better competitive positioning using the assets they have. They have let go of some assets. They have converted some assets to become more sustainable. For example, the Martinez facility. They have made changes to the Martinez facility to build it as a renewable fuels facility. They have made sure that across the board, they're executing in a low-cost fashion, which means they're always going to be focusing on ways and means by which the cost of operations can be made more efficient. This is an important point. Keep it in mind. They let go of the refinery at Gallup. They just made it idle because operating effectiveness left a lot to question. They have figured out better logistics to make the facility at Dickinson much more accessible to feedstock from a logistics standpoint, because for petroleum and other industries in the refining space, transportation costs can be fantastic. They can really pull down the operating efficiency and ultimately end up increasing the cost of the produce. So this is something they have taken particular effort in. The company also states elsewhere that they rely a lot on technology systems, and they've made a lot of investments in technology systems. Where is Marathon Petroleum headed? They want to invest in sustainable fuels and renewable energy. They have set targets, so they're particular about sustainability, they're particular about ESG, and they're particular about controlling emissions as they focus on continuing to win or continuing to hold accolades like the Energy Star Partner of the Year, right? So these are dimensions of the company that one needs to be aware of when trying to engage with them. It will make sure that when you reach out to prospects in Marathon, you demonstrate that you understand their business, because all the companies that are in the energy business are coming under greater scrutiny given the tectonic shift that the world is going through to more cleaner energy, sustainable energy, renewable energy, all of that stuff. So any industry, any company that has emissions to its credit and is using up a lot of natural resources is going to be scrutinized very heavily, which means that's an area, if you can help them, they're going to be receptive to you. When you look through the quarterly report of Marathon, you'll find an important section on strategic and operations update. This section can be particularly valuable to understand in as much detail as possible, because they're talking about specific strategic projects and the state of how those projects are evolving for the company. Here is a section about the Martinez refinery, which is expected to produce renewable fuels very, very shortly after having been given the necessary certification and having cleared all the necessary paperwork to get moving with it. This means as they produce the fuel and want to distribute it, the company is going to keep an eye on how the distribution network plays out, how the supply chain network plays out, how the outlets from which this fuel will be consumed are going to manage the inventory, are going to manage the amount of fuel available to service the demand as the country gets into, beyond the summer, they get into the winter, the fuel consumption might increase and change with time. All of that is going to put a lot more focus on how Marathon will manage the fuel supply and the distribution and the logistics around what's coming out of the Martinez refinery. This being a new step in that direction, there is going to be learning periods, there's going to be optimization. So any capability that will make this entire supply chain more efficient is something that Marathon is likely to value a lot. The second interesting aspect in Marathon's business strategy was around, again, renewable fuels from the Martinez facility, where they have aligned the supplies, which is feedstock, agricultural feedstock for producing the fuel, and the distribution to the outlets. They've tried to optimize the supply as well as the distribution. In addition, forming a joint venture or a 50-50 partnership with Neste, so that both partners are jointly figuring out and ensuring there is adequate supply and are marketing the products coming out of the facility. This puts in focus one of the aspects that we've seen in recent times, which is even fuel and other utility product providers want to increase customer lifetime value. So they think about, if I am marketing these fuels, I want to get these customers who are consuming my fuel for my automobiles and stuff in a manner such that they stay sticky with the brand. Fuel can be very undifferentiated, but based on the kind of experience that you can provide them, it can become very sticky for you. Like you always want to refuel at 76, or you always want to refuel at Chevron and so on, right? So this is another aspect that Marathon is likely to look into, because overall, as consumer loyalty increases, the cost of operations can start coming down for you. The last bit is Marathon's focus on making sure their suppliers are sticking to a high bar of performance standards and ESG compliance. So Marathon has put in place a supplier code of conduct and wants suppliers to be able to perform at a certain level or above, so that Marathon's downstream quality to their consumer can be met. This is yet another area where the company is likely to continue the focus, because once you let go of the standard, it can become very, very difficult for you to pull it back. So they will want to maintain it and keep upping the bar on that front. Section, for a change, we analyze both the quarterly earnings as well as the annual report of Marathon. It might well be that when you are reaching out to prospects in Marathon, you want to leverage information and insights from both of these sections in order to have a more meaningful conversation around Marathon's plans and how your product or service can align with them, be it for supply chain or for logistics or for transportation efficiency, or even things like employee engagement. Marathon is investing a fair bit in making sure that their DEI standards are held quite high. Remember, they're a company that has got over 43,000 people. So, and they talk about having executed good, strong DEI programs and brought diversity across a few thousands of them, which means there's still a lot more of their overall employee base for which they'll have to start thinking about how they're going to make sure that they're building a fairly diverse, inclusive organization that empowers the team. I hope you enjoyed this one. As always, feel free to reach out to me on LinkedIn or on these channels and share with me your feedback. Very often we find that this kind of analysis can take a lot of time. It's absolutely valuable, no questions about it. As a sales rep who wants to engage with enterprises, you should be familiar with the nature of the business your prospects are in. Otherwise, they don't respect you, right? And you can speak your language if you know about them. But it can also be very time consuming. So the next time you end up spending half an hour, 45 minutes to an hour going through a company, think about if there can be better ways. Okay, B2Brain might be one such way for you to explore. You might find other ways too. Let us know. We are always happy to hear. Have a good one.